Morning, everyone, and welcome. As you can see, today is really a spectacular day. We're celebrating 25 years of innovation, 25 years of partnerships with our advisors, and 25 years of building Discovery Life. So, really, thank you for joining us today. It's a remarkable moment, and thank you for your support throughout this 25 years. We wouldn't have been standing here today celebrating together without your support, and that's so good to see so many familiar faces which help to build the business. So we'll take a short trip down memory lane today, and I'll cover the past a little bit, and then I'll hand over to Gareth, who'll take you through the product journey over the last 25 years, but more importantly, where we are today and what opportunities we have available. So when we looked back and we thought, let's put a slide together in terms of what were the key innovations through the last 25 years. Now, it was a bit of a humbling experience. We had to pick some of the key moments to enable us to fit it all into one slide. I mean, we've done a lot through the last 25 years collaborating with you, and we'll touch on some of the specifics throughout this presentation. But just to look back, it was a remarkable journey of innovation. And where we are today is in a strong position. The business has never been stronger. Our shared value model has never been more relevant than what it is today. We've seen the highest levels of engagement and healthy living in our customer base. Our policyholders are embracing shared value, embracing engagement. And you can see on the left-hand slide there just the profound impact that this model has on mortality experience, genuinely making people healthier. And as a result of that, we've got a healthier risk pool. We channel that through more benefits. You can see just how the shared value payments in the blue bars in the middle has picked up over time, uh, to a point where now more than a quarter of the payments we make in the recent years has been through shared value payments, through paybacks, through cash conversions, not only paying benefits. And then the one thing that's been fairly constant through the last probably 20 years is our leading market share position. We've maintained the position of roughly 2.5 times the quantum of new protection business written in Discovery Life compared to the average of the next five competitors. Again, looking at this graph on the right, Discovery Life has always maintained that kind of that high bar. However, the next best competitor has moved over the years. So whichever bar is kind of the higher of the next five has changed over time. So we thought about the journey and the evolution of Discovery Life in three really profound and distinct periods. So first, it was the introduction of Discovery Life, who really disrupted the insurance market with innovation after innovation for a number of years. We've used that knowledge of risk and build up our knowledge of risk, pioneering the shared value insurance, which really marked the second phase of evolution of Discovery Life. And then recently we've moved to embrace data and technology, personalization and hyper personalization of life insurance and life insurance benefits. And we'll touch on each one of these items in a little bit more, or journeys in a little bit more detail. And no presentation of Discovery would be complete without just reflecting on our core purpose. Why are we here? What guided us through this journey of 25 years in the case of Discovery Life? And it always starts with a why. When Discovery Health started, it had a very simple but profound core purpose: to make people healthier. And that's the motto that Discovery has lived by every day. When Discovery Life was introduced 25 years ago, that core purpose was expanded slightly. We stuck to make people healthier, but introduced also enhancing and protecting their lives. And we've never changed that and deviated from that core purpose throughout our 25-year journey. How we've achieved it is our shared value model. I've touched on that previously. So by incentivizing our customers, our policyholders to live healthier, we benefit from a healthier risk pool. That in turn give us the ability to channel shared value benefits and better premiums, better benefits back to our customer base, which creates this virtuous cycle, and you end up with a healthier society on the back of that. And that's all being manifested through our product, through innovation, making sure that we've got the most rich protection benefits just on the back of the shared value insurance model as well. So just if you were to allow me, reminiscing a little bit in the past, in the last 25 years, I've been fortunate enough to be part of this entire journey throughout the 25 years. And I still remember that first launch almost exactly 25 years ago. Discovery for the first time tried something new during that launch. It was at Gallagher Estate with this revolving stage. So I think we've figured out afterwards it was not a good idea to have Herschel and Adrian's backsides to the audience half of the time and only seeing the front side half of the time. So we've moved away from this revolving stage idea. But what we launched on the day was two profound new innovations. The first was the separation of risk and investment. So at the time, the market was characterized by universal life insurance. And we realized that sitting back and analyzing that, as actuaries do, that there's a lot of inefficiency in the old universal style policies at the time. We've separated risk and investment. That led to an estimated roughly 30% more efficiency in terms of premiums that we could pass to our policyholders. And we've used that to rather enhance the benefits that we can provide to our customer base. So we looked at each one of the benefits that was available in a typical life insurance space at the time. And we redefined and we refreshed and innovated along each one of those benefits. Some of you might remember this graphic representation of what we affectionately called the onion at the time, with kind of the idea of a life cover as the core, wrapping around all your other protection benefits, severe illness, disability, income disability, and ultimately within the life fund, and all manifesting. We had the idea, even on day one, sitting on top of a vitality chassis to make people healthier and really starting the journey on the core purpose. How that manifested in some of the specifics, if we think of what we've done for life cover, we had the idea of also making cover global. South Africa was entering a new growth phase at the time. Our citizens, our customers were more global. So we had the ability to link your fund and your life cover to a global currency or a global index. We also introduced the global education protector at the time, which has been a phenomenal benefit. For disability cover, we innovated by introducing severity-based payments and, very importantly, objective medical criteria. So it was recognized at the time that a disability claim was a little bit like playing the lottery. You submit a claim to a life insurer, you don't know what the outcome will be. They may or may not pay, you don't know. We've changed that by introducing objective medical criteria, and we've built on that ever since. Moving to the severe illness cover, we also had the idea that people don't only, unfortunately, get to do with a severe illness once in their lifetimes. You could have multiple claims. So we've introduced unlimited multiple claims, severity-based. We've introduced the global treatment benefit, recognizing that you've got, although the best medical care in South Africa, you have global centers of excellence specializing in certain very specific medical treatments. And that was profound at the time. Income protection was typically capped at 70%. We've introduced 100% upgrades on permanent disability, again recognizing that you don't need that income capped at 70% when a customer is permanently disabled. And again, all on the Vitality chassis. We had an inkling of moving into the shared value world through dynamic underwriting at the time, and that really opened the door, looking at what became shared value over time. So thinking back a little bit, just what happened after our launch, the market reacted quite aggressively, criticizing the benefits. I remember many Saturday morning opening the newspaper with a specific column written by a respected journalist. And the competitors also used that to criticize benefits. It's not necessary. They dug into severity-based payments and many of the items we've launched. But I think they soon realized that we're onto something here. And they gave a best endorsement that you can possibly get from your competitors, as each one of our major competitors followed. They copied the product in one form or another, never quite managed to go into the shared value space, but certainly some of the benefits. I mean, we saw one after the other moving into the peer protection space. We saw rapid growth through that period. And again, thank you for your contribution. We would not have been able to grow and stand here today without your dedication and your contribution, criticism, and advice through the last 25 years. And that led us to really provide premium efficiency and best benefits to our customers. Another thing that we saw through the introduction of revamping all these benefits is higher take-up of ancillary benefits than what the market has ever known. We saw significant take-up of not only life cover, but disability, severe illness, income disability, and that led to this holistic risk protection cover. So a long history condensed into 25 years, and I think together we have really changed the insurance landscape, not only in South Africa, but also globally, where many of our products has been exported and been recognized as best of breed throughout the world in terms of the protection space. So with that, thank you again for your support. I'd like to hand over to Gareth, who will take you a little bit deeper into the product evolution and the specifics of the various products and benefits and that evolution over time. Thank you.
Thank you, Riaan, and good morning, everyone. I'd firstly like to echo Riaan's sentiments. It really has been a remarkable journey. I wasn't there from day dot like Riaan was, but I've been there for almost 2 decades of the journey, and it's been incredible to grow and watch this journey unfold with all of you. I know many faces in this room have helped us build from day zero, and thank you for your support, for your friendship. As Riaan said, sometimes our harshest critics, but really have collectively built something I think incredibly special. Riaan's handed over at kind of what we've called phase two of the evolution of Discovery Life. And that's really when the whole kind of shared value insurance concept came into being, as you know it today. And we really coined that term as a new category of insurance in the context of shared value, and then placed what you know as the kind of stack of life plans, the comprehensive suite of risk protection aimed at every single client segment, but on that vitality chassis and personalized in a shared value model that's fit for purpose and relevant for every type of insurance and type of client. And that's the stack of life plans and that you've been selling over the last 10 years or so. Underpinning all of that, as Riaan mentioned, is this shared value insurance concept. And the data behind it is profound. We've learned more and more about how powerful that data actually is over the years. The concept, as Riaan mentioned, a very simple, intuitive concept. 4-4-60 heuristic. 4 lifestyle behaviors lead to 4 non-communicable diseases, which effectively end up in 60% of deaths worldwide. And by incentivizing the right behaviors across these 4 kind of key behaviors, Riaan showed that we've been able to bring down mortality rates by almost 80% in the recent years. So I think probably beyond the wildest dreams, Riaan, you were setting those initial assumptions on day one. I think we had a good sense that this is intuitive, this should work, but I don't think any of us would have expected the ability to really bend mortality curves to the extent that we've seen possible. Numbers like 60, 70, 80% lower mortality for our most engaged clients. The shared value model has taken, quite a path over the years, and we've tried to pick out some of the key milestones. As Riaan mentioned, the launch itself was not necessarily about shared value. It was really, disrupting the entire core of the insurance industry with the separation of risk from investment and kind of the product innovations across the board. Health integration, as you kind of know today, came into being in 2002. We then launched our first payback benefit. What a successful journey that's been, in 2004. And beyond that, 2009, some of you will remember the cash conversion benefit, and we're starting to see those pay out in a dramatic way. In 2011, we coined the term shared value insurance, and I think it kind of crystallized into the model that you see today. It was written about in the Harvard Business Review and has become a new category globally of insurance. And then I think we've kind of picked the bank integrator as the next key milestone. I think such excitement in our actuarial space about the power that that bank integrator provides. The new data coming out of the bank is unbelievably powerful, and we're starting to see deep correlations and insights that we believe will make an incredible amount of difference from an actuarial perspective going forward. So hugely exciting times, and we're seeing massive take up of that bank integrator, about 50% of new business, so unprecedented levels of take up in that space, and then double payback about 5 years ago. And that shared value has manifested in unbelievable rewards. Riaan talked about the fact that kind of a quarter of our payouts each year are shared value payouts. Look at the kind of mountain on that right hand side. You can see it took about, I think it was 10 years. 2014, we reached R1 billion. Okay, so 10 years to reach our first billion of paybacks, and I remember that presentation quite clearly. As we sit here today, we're paying 2.5 billion rand every single year to our clients through the shared value model. It is a remarkable trajectory. You can see that what happened with payback is now happening with cash conversion. The light blue in that mountain, you can see the point of inflection as the cash conversion payments are starting to come through, and we expect to pay an additional almost 9 billion over the next 4 or 5 years under the cash conversion benefit. So tremendous value. I'm sure you've all seen it playing out in your books, in your own lives, and with your clients as well. And then obviously some of the more bespoke benefits, things like the university funder benefit, a really powerful use of shared value, paying out 3.2 billion rand currently to clients who have covered their kids in terms of their future education, just through parents being healthy, funding future university education. So that's the shared value model. I think, and Riaan did mention this, but some of the key principles of how we've thought about the design of our products have really been with family in mind. From day dot, we introduced, at the time we were the first in the country to do that, the auto child and parent severe illness benefits. So it was embedded in every single severe illness that you sell. You've got these embedded protection for children and parents. So really having family at the heart of everything we do. And we've paid out 150 million over the last 10 or 15 years under those automatic free benefits. We then added the auto child impairment benefit back in 2018. And then I think importantly in 2020, introduced the child protector. So that's the buy-up benefit that's available to you that protects children for up to 7.5 million rand if they suffer from a severe illness. You can see some of the stats. We expect 1 in 10 kids currently, and these are unfortunately on the rise. 1 in 10 kids will suffer a severe illness or disability by the time they turn 18. And it really is a dramatically life-changing event that you can provide incredibly comprehensive cover for through that buy-up child protector benefit. And then obviously Global Education Protector, a real flagship benefit, covering our kids' education, indemnifying kids' education. Some interesting stats on the right-hand side there. What the teams pulled out is the percentage of our clients' income that is spent on education. And you can see it started off high in 2017 at 20% of income being spent on kids' education. In a short span of time, 7 or 8 years, that's increased already to 30%. And the reason for that is you've got this kind of double inflationary effect of education inflation, where education inflation at its core is higher than salary inflation. So each year it's getting more expensive relative to earnings. But obviously kids also get older. And as they get older, the cost of education also increases. So you get that double exponential effect to education inflation. So you can see kind of the trajectory of what education costs in terms of our clients' earnings. And that's why something like an indemnity protection product like Global Ed is so powerful. You're not having to work out those calcs and buy life cover that you hope covers the education journey. You're buying an indemnity product that ensures the peace of mind that education will be covered. And then obviously through the education, through the university funder benefit, allowing clients in a very unique way to use their engagement in Vitality to fund their children's future university. The next kind of theme I think that has embodied all of our products over the years is the concept of globalization. I think from day dot, and Riaan mentioned it, we have always thought about our insurance in global terms. Um, and why is that? We're in a unique place in South Africa. It's a highly mobile place. There's growth, there's volatility from a currency perspective. And, when you look at South Africa's globalization status, more than, we're in the kind of top 30% of the world in terms of mobility of our clients. Right up front, the global linkage benefit. Some of you will remember selling global linkage in the early days, and that was really put in place immediately to protect clients against currency depreciation and asset movements. The global treatment benefit from a product perspective, I think, was visionary. Riaan mentioned this, the ability to get boosts to your severe illness cover if you require treatment overseas is just an incredibly powerful benefit that was in our product from day one. I had an experience 2 weeks ago where I was in a restaurant in Joburg and I recognized one of our advisors, and he called me over to his table and introduced me to his friend and client who he was sitting with, and proceeded to tell me the story of what had happened to that client. This particular client told me that he, a few years ago, was a recipient of the global treatment benefit, where he had complete kind of lung failure, lung disease, and had to have a double lung transplant in the US. And his particular severe illness benefit paid out was boosted to 180%. He told the whole story about how, the flight over to the US, how they had oxygen and machines and was barely keeping him alive. And he looks unbelievably healthy today. It's very gratifying. And you guys work with your clients on a daily basis. It's wonderful when we get to see in kind of real people the power of these benefits and how they can actually save people's lives. And I think we'll see that playing out more and more in the coming years as these centers of excellence pop out across the world. I've talked about global ed. And then I think the real culmination of this global journey of thinking in terms of protection was with the launch of our Dollar Life plan back in 2014. That was through Discovery Life International, based and domiciled in Guernsey, and really providing the first and only authentic, full offshore suite of risk protection to South Africans. And that, I think, was a seminal moment in our story. We've seen over 1,400 advisors now using dollar protection, and it's given a new angle to financial advice, recognizing that one of the questions we should be thinking about from risk protection perspective is diversification, is ensuring that you're covered from a hard global currency perspective. And we've seen advisors really embracing that to their clients' benefits over the years. So that dollar plan kind of completed that suite of benefits, and the full list of life plans that you've been selling over the last decade or so. As we move into phase 3, I wanted to just again rewind 5 years. I'll take you all back to the beginning of 2020 when COVID hit the world. It was a remarkably scary time, I think. A lot of uncertainty from a life insurer's perspective. Riaan, you'll remember we were kind of trying to scramble together projections and work out what this would mean and daily excos, and it was a remarkable time. We didn't know at that point in time how the model would stand up to the stressed environment, extreme stressed environment of a pandemic. We knew that the model worked for non-communicable diseases. Does it work for an infectious disease, a communicable disease like COVID? And it was just such a powerful reminder of the model's robustness. We saw that on every metric, this model was incredibly robust and powerful, whether it comes to vaccination rates, mortality rates. You can see it was even more predictive of COVID deaths than normal all-cause mortality. So an 80 or in excess of 80% reduction in COVID deaths through the model. The model was also leveraged to allow unbelievable outcomes for clients. You'll remember the premium relief options, where the market was allowing, kind of cover holidays or premium holidays. We were allowing clients to access their future paybacks, to pay premiums today and keep valuable cover in force. We had more than one client who actually accessed their future paybacks to pay premiums, keep their full cover in force, and ended up dying of COVID. And their family was protected purely because of this unique ability to access their future shared value benefits. Really, really powerful manifestation of how this model can be used in extreme circumstances like COVID-19. And we still have that premium relief option available to clients today. And then from a cover perspective, more than 7 billion paid under COVID. We designed bespoke benefits for COVID, the acute multi-organ benefit, really, really powerful, I think, test of Discovery Life through that time, changing our clients' lives and being there to deliver our promise when we needed it. You'll remember your lives. We kind of couldn't see clients. Everything moved accelerated from a digital perspective. And I think in many ways, this was where the third phase of our evolution kind of started and the journey that we've been on over the last couple of years in terms of the extreme digitization and hyper personalization of the model and of the life insurance landscape and where we sit today. You'll see that kind of stack has changed to a bunch of plans on the phone, on the Discovery Bank operating model, and I'll talk to some of the thinking behind what we've called phase 3. And really, under phase 3, we had a couple of key objectives across our kind of 3.0 plans that you've been selling over the last couple of years. Leverage the same list of globally leading benefits. We know that the benefits are highly differentiated, but simplify. Simplify the experience, simplify the product in terms of the shared value model, keep the same power, but in I think, a highly simplified version. Use data to fast track and streamline processes and underwriting, and I think some amazing outcomes from that perspective. A complete transformation of our entire process. And thank you to all of you. You've been on this journey with us. We moved from kind of the old analog smart advice world over into Advisor 360 over the last couple of years, not without some teething issues, and thanks for bearing with us. But I think a remarkable space and a very, very powerful space that we're in today in terms of Advisor 360 and the power that creates for you and your businesses. And I'll talk to some of those stats. And then all manifesting in a simple, intuitive, beautiful kind of journey for clients on the face of their mobile, where life insurance is no longer a book in a drawer, but it's something that you can see on your phone, engage with, and interact with. And that's really what we see as kind of the objectives behind our 3.0 plan of products. Just talking through each in a little more detail, and I'm not going to go into great detail here because you all know the benefits. I think it's leveraging that exact same suite of unbelievably differentiated benefits across the board. From a shared value perspective, as I said, we really did focus on simplification. We did away with things like vitality rating. We collapsed cover and financial integrator into one simple life fund. That manifested in a very powerful new cash conversion benefit that pays up to 100% of your full life cover in 10 installments between age 65 and 74. We've seen really good take up of that new cash conversion benefit, wonderful feedback from our advisors about the structure of that new cash conversion benefit. And then I think from a payback perspective, simplifying the base, but really leveraging, I think, the power of vitality and the power of AI and where we're going forward. Some of you may have seen earlier this month, we launched an unbelievably exciting new partnership with Google. Adrian did this launch in London. I think it was about a week and a half ago. And we're at kind of the precipice of something incredibly exciting in terms of using the power of AI to double down on core purpose, to make people healthier, simplify the experience for them, but use the power of data in the background to really be more precise and more effective in what we help clients to do to be healthier. So you've all experienced it, I hope, in terms of the kind of personal health pathways, really using an AI model to work out based on each individual's own risk factors, what is the single next best thing that they should be doing for their health and wellness. And we're hearing remarkable anecdotes coming out of this, where we're telling clients based on their risk factors, you should be going for this screening. And then we throw incentives at that client to go for the screening. And then the client actually picks up an early stage cancer or some type of chronic disease. And there's multiple stories like this. And just think about what's happened there. You've got AI that's picked this client, needle in a haystack, to go for this particular screening, and you've picked up early stage cancer and saved a life. It's a remarkably powerful capability, something we're incredibly excited about globally. We've set the ambition to have Vitality AI in every insurer globally over the next 5 years or so. And I think it will help us double down on that core purpose of making people healthier in an incredibly powerful way. From a life insurance perspective, as you know, we've moved paybacks real time in a sense. As those clients perform those next best actions and close that ring, they can then get up to 100% of that month's premiums back immediately. For the first time, you'll be able to feel that in real time. Go for the action, you'll get the SMS or the WhatsApp saying, here's 100% of your premium into your payback fund. Usually payback has been an annual anniversary process. And I think we're moving into a real-time basis using Vitality AI, personal health pathways, and the power behind that. A lot of complexity in the background, very simple from a client perspective. Just do this and get rewarded. From a underwriting and process perspective, I think huge leaps forward, and hopefully you guys are feeling it on a daily basis. These are some of the stats that we've pulled out over the last 5 years. We've seen a 20% increase in case submissions, but a 51% increase in 5-day activation rate, and a 189% increase, almost a tripling of the same day activation rate in a 5-day period, in a 5-year period. So really using data and processes to ensure quick underwriting, auto underwriting, and I think a lot of power to come in this space. So look out for more opportunities, and I'll touch on that going forward. And then Advisor 360 is firing on all cylinders, and thank you for embracing the new system. It really is powerful. We're seeing about 140 life quotes generated every single hour using the Advisor 360 system. So really, really operating at scale and, hugely powerful capability. Hopefully you'll agree in your practices. From a client perspective, this all manifests on their app now. You can go onto your Discovery Bank app or Discovery Corporate app and really play around with your product, see what cover you've got, toggle to different vitality statuses, project your cash conversion and paybacks. It's a totally new paradigm where life insurance is now something interactive. It's something real time. It's something that rewards you in an incredibly powerful way. And I think we've got a lot more that we can do in this space that we're excited about. So that really is 3.0 and where we sit today, a suite of newly designed life plans, leveraging the power of our products, but putting it into kind of the new age world, the new age digital world on the platform of A360, and for your clients on the Discovery Bank operating system in the kind of palm of their hands. Before I move on to the opportunities, I think we wanted to reflect on the role that you've all played from an advisor perspective in the journey, in the kind of shared value model. And what the actuaries did, as any good actuary does, is ran a whole bunch of models. And something that we try to do all the time is understand what drives engagement, because that's kind of how this all works. We need people to engage to power up this whole model that we've talked through today. So we try to work out, well, what is it that drives that engagement? And when you look at the data, we found that the probability of particular clients engaging is actually not very different. It's not really age dependent. It's not really level of health dependence. It's not where you live. It's not your income even, and it was quite agnostic to a whole bunch of factors. Interestingly, the one thing that we found was unbelievably predictive in terms of engagement is who your advisor was. And we were finding that advisors were actually the key proponents of driving engagement in our base. And I think that's a remarkably powerful insight. I think as we move into the future of advice, of AI, of robo advice, we are unashamedly advice driven. We will always rely on advisors to sell our product and to push this value proposition forward, because we've seen how powerful that has been, and I hope that you will feel that every day. It works both ways, luckily. And we've seen that while it's advisors that are driving the power of the model and driving engagement, the reward comes back to advisors. And what we've calculated is that the advisors who embrace the model, who sell integrated business, who drive engagement in their base, actually earn more commission and have higher practice values. In fact, an engaged practice is worth 2.7 times that of an unengaged practice. So it's a perfectly symbiotic relationship with advisors, and they are really that kind of fourth stakeholder in this shared value model, which operates in a very powerful way. The actuaries have played some more with data, and this time we've started to look at advisor behaviors almost at a benefit level. And there's some remarkable insights here. I've picked a few of them just to show you, and I think this kind of confirms what we see as the power of the Pareto distribution, which is, how powerful the kind of extremes of the distribution look. So what the team looked at here, I don't know if this laser works. We looked at business life plans, and we looked at the top 10% of advisors who write business assurance. Okay, it's not by API. This isn't about who writes more business or less business. This is about who focuses on a particular type of business or a particular product. So the top 10% of our business assurance writers write about just under 40% of their API is business assurance. Okay. Interestingly, the average is 7.2 times less than that. That's not because you've got different client bases. This is just a function of people seeing an opportunity, embracing the power of something like business assurance in your practice, looking out for signals when you come across a client. Do they have a buy and sell? Are there opportunities? Is there contingent liability? Is it key person? And we find that the advisors who are thinking like that and are embracing that part of the advice are increasing the API that they sell by 40%. The advisors who aren't, you are simply missing that opportunity. And you kind of see that play out almost across every benefit and every kind of product suite. From a dollar perspective, the top 10% are selling just under 50% of their business as dollar. The rest of the book are 22 times less. So they're simply not seeing the opportunity, not using that opportunity. And we know that that manifests in a dramatically different outcome for the clients and for these advisors in terms of the value of their practices. So again, unbelievably powerful outcomes. In cash conversion, a benefit where the advisors who are looking at cash conversion and incorporating that into their advice process are selling cash conversion almost 50% of the time to their clients. That's 14 times. Just look at these numbers. I'm not talking about 10% more or 40% more, 14 times more, 7 times more, 22 times more that we're seeing for the advisors who are focusing on particular parts of the book. So again, from a cash conversion perspective, that will manifest in significantly stickier policies for those advisors. We see massively higher retention rates, hugely valuable for the clients and valuable for the advisors' practices in terms of opportunities as well. Child Protector is a remarkable one, because it's definitely not the case that some advisors have way more clients with kids than others. This is quite uniform in terms of what your books look like. And yet, our top 10% are adding Child Protector almost 60% of the time. The rest, 27 times less. It's not client driven. This is all advisor driven. It's, are you actually thinking about these opportunities? When you sit with clients with young kids, are you putting forward the Child Protector as a valuable benefit opportunity for these clients? The advisors who are looking at it have transformed their businesses, and their clients are unbelievably well protected for doing so. So I know, thankfully, many of the advisors in the kind of bottom bands are sitting in this room. And that's, you've helped us build the business today. But there will be some of you who are thinking there are opportunities to, look at enhancing the business that you write and sell to your clients. This is just four. We can kind of choose. If you split every single business or product type or benefit type, you'll see this same type of distribution playing out. When you're focusing on the power of a unique benefit, it will transform the financial advice that you give, and then obviously provide protection to your clients at the same time. In line with that, we're really excited about our new Business Life Plan 3.0 that goes live this weekend. So from Monday morning, you will be able to quote Business Life Plan 3.0 on Advisor 360, and that really completes the entire migration of our suite of products off Smart Advice, off the 2.0 structure, onto the new 3.0 on Advisor 360. So please do look out for that this weekend. We're really excited about the opportunities that this will create for you. I've talked about dollar. I think this is always an opportunity. The rand is strong at the moment. Ironically, that provides the best time to get in as a dollar plan. If you use the exchange rate protector today, you're locking in about 14 Rand 50 to the dollar for the next 3 years. It's a remarkable opportunity. Think about offshore risk protection and diversification as part of your financial planning. We've got that slider built into Advisor 360 that allows you to kind of slide cover into dollars and hopefully makes the process of quoting easier for you. It's something to consider for every single client. We've got 4 weeks, I think, left in the year, which someone reminded me the other day, and it is that kind of crazy season. And I think I wanted to just highlight some of the easier opportunities to focus on. As we kind of run up to the end of the financial year, the opportunities that require less or no underwriting are always time well spent at this time of year. From a lock-in perspective, we've seen remarkable increase in take-up of the lock-in benefit. It is such a powerful capability. It allows you, we talked about the power of long-term protection, multiple claims, converted SIB, ICB's whole of life. We've got our entire suite of benefits that's now whole of life. That's when the claims start to happen. The problem is that on age-rated type funding patterns, cover does become expensive in retirement. Lock-in is an incredibly valuable antidote to that. It allows you to pre-fund those age-related increases in retirement. You can ensure that your pattern is 5-5, proper 5-5, 5% ABR, 5% ACR throughout retirement, moving to 0-0 at age 80. Unbelievably sustainable and powerful benefits. The returns that you get on this pre-funding are remarkable. We've got tools that show that it's by far the most efficient way to pre-fund. We've also made it very easy to add. You don't need to upgrade anything. You don't need underwriting. We've got 290,000 policies on Flex Rate, on Super Rate, on Accelerator, all of your clients' existing policies. You don't need to change a thing. Simply add lock-in and ensure that those premiums are protected in terms of sustainability in retirement, making sure that your clients will be able to keep that valuable cover in place when the probability of claiming is at its highest. So a very valuable opportunity. We've looked at, the API is about 470 million in terms of that opportunity that's available to you. Your franchises should have lists. We've looked at bulk quotes. There's a lot of opportunities out there. It's a very powerful way in the next 4 weeks to ensure that your time is well spent. In addition to that, we are constantly trying to look for pre-underwriting opportunities using our data. So we've got what we call our pre-vetted opportunities on Advisor 360 and on the various dashboards. Please reach out to your franchises for these. We've got over 1,000 clients who we've effectively pre-underwritten for additional severe illness, captus, and life cover of up to it's about 3 billion in cover that's sitting there untapped. Literally just needs a declaration of health, and you can activate that cover. And then the same for upgrades to lifetime of severe illness and disability. So really powerful, easy, low-hanging fruit at this time of year to ensure that you're spending your time on the business that's going to go through quickly. Another fantastically powerful hack in terms of time in the next 4 weeks. We've got the new wills and trust and estate planning business that was relaunched a couple of months ago. Discovery Wills and Trust Services. We're seeing incredible take up of this. We've seen more than 200% increase in advisor referrals over the last 2 months since go live of the new fully in-housed wills and trust system. 90% of clients who are sitting in meetings with our testamentary specialists are taking up and submitting a will, and then a large proportion of those are submitting a DEP policy. Remember, the opportunity to you is to ensure your clients have an up-to-date will, but then we also sell the DEP. You take 90% share of that commission. You also get share of exec fees. And really importantly, and we're getting some very powerful anecdotes here, the testamentary specialist team are trained to look for opportunities when they sit with that client. And they will pass reverse leads back to you, where they'll tell you that they've identified this client has a gap in terms of estate planning and need extra life cover or need extra investments or retirement saving need. And they tee that up and pass it back to the advisor. We've seen some big life policies and big investments sold on the back of that meeting with these testamentary specialists. It's a really powerful thing for our advisors to do. Busy time of year, spend that 1 hour a week sending leads through to that team. You're kicking off an entire train of work with another fully trained team. You can then go and see your clients as you usually do at this time of year, knowing that you've got a team of highly qualified testamentary specialists that are going to be seeing your clients, ensuring their will's up to date, selling the DEP, and you getting obviously the 90% com share, the reverse leads, the share of exec fees, and obviously the peace of mind that your clients are well protected from an estate planning perspective. All of the above is available in Advisor Insights dashboards on Advisor 360. Your franchises, your BCs will have all of these opportunities available for you. I'm sure they've all shared it with you already. Some of the research papers that we've talked about today, the research paper into the power of the financial advisor in the shared value model that the team has put together, we'll be making available. It was released a couple of months ago, but we'll resend that. And we will be releasing a paper kind of looking at the highlights of these last 25 years with some of the key data insights that Riaan and myself have highlighted today. I wanted to just remind you of the 2 special offers that are running for the next 4 weeks. The 25% enhanced integration discount special offer. And that really ensures that in your kind of core integrated space, so the life cover only type of space, that you're still getting deep discounts and are highly competitive. So when you add bank integrator, even a life cover only quote today will get about a 30 to 33% integration discount. So you should see highly competitive on every single quote, even the life cover only quotes that you quote over the next 4 weeks or so. And then very powerfully, the auto cash conversion benefit. So on every quote that, or qualifying quote that you quote today, you'll see that 25% cash conversion is automatically added. That's free for the first 3 years. We've run this before. It's such a powerful offer. Not only does it kind of differentiate the benefit completely, but in 3 years' time, it's such a good choice for that client. They can remove it and they've lost nothing. But we see that very, very, very few of them do actually end up removing it. At that point in time, you can show them, well, this is your projection. You're getting X million at age 65. You've got to pay a small amount per month to get that. That's a very powerful conversation. Very few clients end up removing that cash conversion at that point in time. So that upsell is kind of embedded in every single discovery product or new business product that you're selling today with that auto 25% cash conversion. And remember, this is an existing book opportunity as well. So for all buy up cash conversion that you're adding, you get that 25% piece for free. So if you add the 50% on the back book, they'll only pay half that cash conversion premium for the first 3 years. Likewise, if you add the full 100% buy up cash conversion, there's the 25% discount for 3 years. So another powerful opportunity in terms of no underwriting, very valuable for your clients, and a 4-week special offer that's remaining. Guys, that's it from me and Riaan. Thank you for your time today. More importantly, thank you for your 25 years of support. It's been an incredible journey with you. We're only getting started. We've got an amazingly exciting kind of year lined up next year, and hopefully a really, really fast finish to this year. Riaan, myself, the teams are all available for anything that you need. Please reach out to us, and good luck for the next 4 weeks. And I wish you all a really relaxing, fantastic, and safe festive season. Thanks very much for your time today.